How do I know when to buy a stock? What I want to do here is share with you some basic day trading tips and really just trading tips in general, because this philosophy carries through no matter what you're trading. Now, sure, I use it for stocks, but even if you're doing futures or Forex or cryptocurrency, I mean, this principle still applies. And right off the get-go, I want to respect your time. If you are here searching for some sort of mind-blowing, like secret little gem, you're not going to get that. What I'm going to talk about here is very, very obvious. But in the world of trading, and if you have any experience trading, you know exactly what I mean when I say this. Sometimes the most obvious things are the hardest things to actually do. And it's just because of the way our human mind is working. So at the core, the best time when I know to buy, and the way I want you to approach this in terms of, okay, when do I actually buy a stock? When is it smart to be buying a stock? When do I think I have the best chance to make money from the stock? Not when it's going up. Wait, what? I get it. That sounds kind of bizarre. But yes, I'm telling you, if a stock is going up, do not buy. That is not the time to buy. Now, there comes with a couple little nooks and crannies, which I'm going to explain here. But what do I mean? Well, we have stock ABC. I know I got super creative with that name. And it's doing this. What I am telling you is the time to buy. How I know when to buy is not right there. Is not right there. Is not right there or not right there. Now, you're rightfully saying, I'm assuming, but Clay, had you bought right there, you would have made money. Had you bought right there, you'd have made money. Bought right there, you would have made money. Clay, that's how you make money. That's when you're supposed to buy stock, when things are going down. I pulled a little mind trick on you though. What did I do? Well, I gave you total hindsight. You knew what the price was going to be doing at that time. So of course it's easy to say you should have bought there and you should have bought there and you should have bought there, because I showed you what happened. And that's why books don't work, because books always just show you a picture, and the book shows you everything that's already happened. So you have this confirmation bias. And what I did to you is I gave you the confirmation bias of showing you that, well, yeah, the price just goes up. So of course, buying right there or buying right there. But in the real world of trading, this is how it appears. So we have ABC once again. And what you're going to see is price goes up. So yeah, it's going up. But I don't know. Do you buy right there? Hope you're saying, well, no. The proper answer is no. You absolutely don't buy right there. You don't buy when stocks are going up. Why though? Because at this moment in time, there's really no way to manage risk. I mean, it's very, very hard to figure out, okay, where would I put a stop loss at? What would my risk actually be? Now, I suppose you could say, well, Clay, I'm going to put my stop loss. Actually, let me make this bigger so you can see what I'm actually. So I'm going to make this. So that's what that's representing. Now, you could say, well, Clay, I'm going to buy right there, and I'll put my stop down there. And I mean, don't get me wrong, that's great. You're putting a stop loss in, but I mean, look at all that. All that risk. I mean, you're taking on quite a bit of risk there if you're just going to put it all the way down there. And all it takes is for a couple of these to all of a sudden, I mean, have you ever bought the top before? I mean, I bought the top before, but all it takes is for you to buy a couple of these tops and have it roll back over and take you out. And that's going to be maybe a 50% overall win rate, because, I mean, for what you would have to get from a reward standpoint in order to justify taking that risk, it's going to be a very, very difficult strategy to use. And sorry, but there's more to trading than just finding a stock that's skyrocketing and just buying and then putting the stop, down below some area way, way far below. All right, Clay, fine. I see what you mean. You don't want to buy stocks when they're going up. So when do you buy them? When they're either going down or sideways. Because as soon as the stock begins to move downwards, let me change up the color here. At least at that point, you no longer have to worry about the dreaded C word of chasing. I've done videos on this time and time again. Chasing will get you destroyed. And the reason chasing gets you destroyed is because the risk is so far off, like we talked about. Now, most people that are chasing, they probably don't even know what stop losses are. But even if you do know what a stop loss is and you do apply stop losses, the risk is just still too big. So all it takes is a couple of those to wipe out a whole lot of wins. Now, of course, you could get a big winner where it just keeps on going and going and going. But like I said, that's not going to be a sustainable strategy over the long haul. But as soon as this happens right here, the price goes down. That's when I know it's time to buy. Now, I don't mean it in the sense of a price goes down and I just buy. But my point is, that's when I know to start to get interested to buy. Or not necessarily down. Maybe the price just starts to go sideways. Well, at least at that point in time, okay, I'm not chasing. The price is at least starting to go sideways. And the reason why you should be interested when stocks prices are either going down or sideways is because at that point, managing risk, putting a trade plan together becomes that much more attractive. It becomes that much more risk friendly. And that way you're going to put yourself in the position where even if you do take several losses, at least the losses aren't something like this where you're getting out way down here. You're going to have a much better idea of where you should be good in putting stop losses. And those locations of the stop loss, the risk is going to be dramatically reduced. Now, of course, you always have the actual risk of losing, but the dollar amount associated with that loss will be much, much less compared to just simply chasing the price and buying because, hey, it's going up. It's going up. Now, the idea here is, yes, you do want to buy stocks when they go up, but you want to find those areas within the trend where it's taking a breath. And when stocks take breaths, when stocks look like they're pulling back, well, you know what? That's going to give yourself a better odds over the long haul of being able to keep account growth going. Because sure, you could still lose, but it's not going to be a situation where you just take some big old loss because things just plummet and plummet and plummet. But you also need to be careful because I get it, and it's a good point if you're thinking it. But Clay, that sounds crazy. You wait for a stock to go down before you get interested. What happens if that right there is the start of a big old reversal? Well, that's fine. My point to you would be, if it is a reversal, would you rather be buying the reversal right there, or would you be rather buying the reversal right there? Who is going to take a bigger beating? Well, of course, the person that bought up there, right? Because they just got in way higher than the person that actually waited for it to pull back. So absolutely, a pullback can turn into a reversal. I'm not refuting that. I'm not saying this is a holy grail. But my point is, just strictly from a risk perspective, the people that do wait for things to pull back, to cool off a little bit, the people that do wait for it to at least go sideways, it becomes a lot easier to see where your risk should be, see where your stop loss should be. And yeah, you could still lose money, but not nearly as bad as those people that chase the stock. So that is where, that is really the core foundation to any sort of trade plan, is you need to know when to at least get interested in a stock. And as counterintuitive as it is, when a stock price is just going straight up, that's not the time to be interested. Now, of course, you could be interested in the sense of, okay, I want to watch it, but you should not be interested in the sense of, I'm ready to buy. No, watch and then wait. And you need to wait for it to pull back. And it can be very difficult because, again, going back to this, you could be watching and then it gets there. Oh, crap, I'm waiting for this thing to pull back. Oh my goodness, I could have bought right there and it still hasn't pulled back. And then, oh man, and that can get you in trouble. In fact, I'll put a link down below where I talk about the whole psychology of, what's going on in this event. But I will say this, if you're watching something and you're waiting for a pullback and waiting for a pullback and waiting for a pullback and it just keeps going straight up, you're doing it the right way. Well done. Sure, there's people that are chasing and they're being rewarded for chasing. But all it takes is one where they buy the top, it reverses around, and let's face it, those people aren't using stop losses. And then it just keeps going down and down and down. And then all those times where they did buy and chase and had wins, they're all wiped away. I've been doing this since 2013, working with traders. I've heard this story over and over again. I did it. If you're honest with yourself, you probably did something like that too. So don't be frustrated. It's easy to get frustrated when you're just watching something go up and up and up. And you're sitting here, you're waiting for the pullback. You're waiting for that pullback. Come on, just give me a chance. Let me manage my risk a little bit better. And it just keeps going up. The temptation is very real to buy, but don't do it. That's when you should not be buying stocks. So how do I know when? How should you know when to buy a stock? When it either pulls back or at least starts to go sideways. Sounds backwards, I get it. Be interested, know when to buy a stock because it's going down. Yes, absolutely. and you want to make sure that you're doing this and approaching trading in a very risk-aware type of way. And by waiting for these little simple things, that's going to be the linchpin that allows you to start to build on top of that a good quality, risk-based trade plan. And that's what trading is all about. So if you found this video helpful, like I said, I know it wasn't anything like mind-blowing, but it's the little things that make all the difference. But if you enjoyed the video, please hit that like button. That's always a good way to communicate to me that you enjoy these types of videos. So like I said, from a time efficient point of view, hit that like button. Leave a comment down below. I will read and reply to all comments. If you've ever seen it in my other videos, then I reply to them. So questions, comments, suggestions, please leave them down below. And then finally, check out the YouTube channel as a whole. There's lots of other videos, including live trade videos. So you'll see what I'm talking about here in practice, and you'll see exactly what I mean by that. So check out those live trade videos too. And hopefully you decide to ultimately subscribe to the channel. But thanks for hanging out, and get out there. And remember, you should be interested in buying a stock when it's going down. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.